Hello. Um, so yeah, here's a bit of an update. The two challenges have been pretty woeful. I'm not going to lie, um, but it's taught me a few things. I think the biggest thing is trading with leverage or any kind of high leverage is not great. Um, I think you've got to be so razor sharp with your entries, otherwise you're pretty much going to get found out quick. And obviously, this was a little bit of a transparent exercise, if you like, just to see, yeah, how we'd get on. And in both instances, we failed. We had some wins, but the losses always get your account blew up, which isn't great, to be honest. And so, whilst it's not the end of the journey, sorry, apologies for frogging the cup. It's the end of those challenges, or at least those type of challenges. So, what I'm going to stick to is a lot less risk. Probably going to be a bit more boring, to be honest. That's the problem. Because if you're anything like me, I like to trade fast and hard, and I like to be in where the action's at. But I think that's probably just the mentality of a retail trader. You hear this all the time, where use low leverage, don't overextend yourself, and it's true because you don't get much of a chance really. I think even on a 20x leverage, you get about 1,000 points to work to, 1,000 basis points, and you only have to look at some of the swings over the past few days just to realise that wow, it's not ideal. I mean, look, let's have a look. Where are we? If we just take some of the swings, look at this one, for example. I'm not even at the bottom of the swing. We can take it up from the top to the bottom. Well, there's over 1,000 point swing alone. Easily stopped out. Now you can argue that, well, why don't you just use stop losses? It's just boring. I just don't like that. I don't like to lose, and I think sometimes if you have stop losses too tight, you miss a lot of wins, in my opinion. I've always rather kind of traded on liquidation, but give yourself plenty of breathing room. And obviously that's what I haven't really been giving myself, specifically on 20x, and even on the last one was 50x. So just stupid, really. So, I don't think I'm a bad trader. I don't think that's necessarily, me not being able to trade properly. It's just a little mix of emotions, a little mix of greed, all kind of tallied into one. So it's time to cut that out, basically. So I'm starting again. This time, just shy of $100. I think I had like $97, $96 or something like that in my account. So the plan now is to just don't trade on anything over 10x leverage. That will give us about a 2,000 point wiggle room. I don't really intend to use stop loss, to be honest. My plan is to map out market structure, figure out what the long term way down is. Obviously, keeping my eye on fundamentals, keeping my eye on order flow through Bookmap, and executing at what I think is a good point to get in at. So that's where we are. So currently, I was watching where we were. So we got our first trade in. Our entry fill. I was watching closely where the monthly open was, start of October, and we came and tagged it here, and then it rebounded back down, went through the 200 EMA, and then it got straight through again. So this time I thought, well, I think I got stopped out on this candle here. This was when I had the second trading challenge. As I say, this challenge is not going to be up to any predetermined value. It's just to keep going as long as I can, and just keep on showing wins, losses, whatever else, and kind of keep keep people updated on what I'm doing and how I'm thinking about the markets and whatnot. So, so just to let you know, let's zoom in. What are we on? We're on the 1 hour. As I say, I like this 800 EMA. Oftentimes it does get respected, specifically on the 1 hour time frame as well. So we looked at what looks like a bit of a cup and handle formation happening, and we came in, we whipped. I got my entry in. I think it was on this point here. You can see here on the bottom where we where we're currently in profit. Now we don't have a large account size on this one. It's just, as I say, so I think we're $4 or $5 in profit. Nothing major. So yeah, came and tagged that, dropped down again, and we're kind of lollygagging around here. But we are starting to approach, an overbought position on the 1 hour. On the 4 hour, we've hit the heart line. Sometimes that can be a reversion from the mean, so once you hit that middle point, it can come back down. It can go back up as well, but we've also got the 200 EMA, which falls nicely with the 800 EMA on the 1 hour time frame as well. It's a very similar position. So that's that. And then the other thing that I think is kind of interesting to play out, specifically on the longer time frame, so on the daily time frame now, we're just starting to, so we've lost bullish momentum on the squeeze momentum indicator, and normally every time we hit this, we do see some good rejection. So let's say dropped here, so on a downward spiral, as you can see, this we kept on going down. We did have a reversion here, but then we had depending on when you took out, if you took out any profit at this, there was a fairly decent move from 19.4 down to 18.4, so 1,000-point move, and then further continuation to the downside here, and obviously so on and so forth. And then we had this big move, which will probably wrecked everyone with this scam wick. And maybe if we can look at some other examples on the daily. Maybe the squeeze momentum isn't that great on the daily, actually, when I come to think of it. Because if you look, you normally start to see bullish momentum coming when it starts to turn dark red, but it continues down further, and then you get this small uptake. And actually on the, on this candle here, which is a nasty big red candle down to the downside, we're still in a what looks to be an upward momentum on the actual daily squeeze momentum. So kind of food for thought. It's not as accurate on the longer time frame to squeeze momentum. However, when you look at the shorter time frames, it's a bit different. It kind of gets respected. So, if you look here. So, if you think of the zone, right, the zone is from the moment we see dark red to light green, all of that is bullish. And from the moment we get from dark green to light red, that's bearish. And it's quite well respected. So, we got this dark candle. It was the first dark candle on this area here. We got bullish uptake on the price action, and then we hit into the green zone. We got further bullish uptake. Okay, so we had a few candles that were still in the uptick here, but we had very, very, very low volume and therefore short price action. But then, we come into the dark green candle area, and then we start to move down, so on and so forth. So specifically on the shorter time frame, to squeeze momentum is pretty accurate. It does give you some sort of an insight into when things are going to start changing with price action. But then we come into the weekend, and this was just horrible. Honestly, this was just. I'm looking back at my own performance for the first two or at least that last challenge. And realistically, we just shouldn't have been trading on the weekend. It was just pathetic volume. Look at that, just nothing, no volume, and then we had this really big spike that stopped me out, and it was just big liquidity grab, came straight back down, and then we've just kind of been bouncing off the 21-day EMA until we pushed through the 200-day or the 200 EMA. So good lessons learned. As I say, don't trade over the weekend. That's the big lesson learned for me. I've drafted out some key lines of support and resistance. If you want to know more about support and resistance, go and check out the educational playlist. I've only got one video up there at the moment, but I definitely plan to put some more on. You can see I've put my liquidation point right up here, which is, in terms of 10x leverage, there's plenty of space to move into there. So I'm not concerned about getting stopped out, at least on this one. So the problem is obviously with a smaller account size, obviously the smaller profits you're going to see. But having said that, it will compound because I'll be always trading at the full account size. So even small profits eventually will compound into bigger profits in terms of being able to utilize that for the trades and things. So this is a new journey. This one isn't a challenge. I think probably put myself under a bit of pressure as well to want to do well. And realistically, it's just I need to just trade the way I like to trade, and with a level of caution. I think 20x and 50x is just silly, really. And if anything, what my channel should have shown you is don't be greedy, because even when you get in at what you feel, and just as a side note, by the way, where I entered into my positions, they weren't bad entries. They really weren't. They were just too close to the liquidation. So, at 50x, you get a 200 point move before you liquidated. So you've got to be pretty perfect with your entries. So so we are where we are. It's just a good lesson, good to learn these lessons, and good to get it out there, and hopefully if anyone's watching and following, see where I made mistakes. But now it's about playing with a bit of caution and just seeing how I get on. So anyone who's following me, much appreciated. I really, really mean that. It's nice to kind of just have people kind of chilling out and watching some of the videos, and not everything's going to be crystal clear, but I'll do my best. And I think that's it. This week is not really a busy week for news, and actually I like that, because it feels like it's true TA and not some big fundamental market shaker that'll just come and shake you out. So what you're typically trading is just pure TA, and I think I like to trade that way. I think sometimes if you're in a trade, no one really predicts, even though you've got a good idea which way things might go, specifically in the economic weather we're in at the moment. It's hard to predict which way news will be interpreted, and therefore, if it goes against you, that's another kind of issue that can really knock you off. So just some ideas. Very much in a sideways market though, even with let's just go onto the daily one quick second, just to do some analysis actually. As I say, I've drawn this triangle here, right at the apex of this triangle. We're kind of near the top here, so I do expect some up and downward action as we zoom in. But as you can see, right now we're kind of in this little small trading channel. Let me just zoom in a little bit, just because it's a little bit easier to see. The other thing I've kind of incorporated is these volume candles. I think I'll explain what they are in a second, but basically when you see these volume candles, it's institutional type trade. So if you've got like 1,000 single Bitcoin purchases, it's not going to move the needle that much, even though the candle might be quite big because there's been a lot of volume, versus a 900 Bitcoin buy and 100 single Bitcoin by individual retailers. That 900 Bitcoin would be a single buy would almost indicate that it's some sort of institutional trader who's inputted that sale, which is why you would see that vector candle turn, say, blue or red in the case of a sell or a short, like this one as an example. That was there will have been some major single buys in this candle, and which would have impacted speed. So the speed of the candle would have been quite high as well, so fast rather. When you see these big swift moves, it's usually some sort of institutional trade. So that's can oftentimes, at least on shorter time frames, be seen as a way to think, okay, well, maybe we're now going to do a breakout. What you want to pay attention to, I mean, if we just go on the hour time frame, with these kind of things, I'll show you something because I think it's a good little thing to pay attention to, right? Let's just zoom out a little bit. What you're looking to do, right, is let's go indicators. We just want to show the VPVR, right, which is your visible range volume profile. But actually, do you know what? Yeah, let's do it. Just move this back. Let me take, I don't know, let's take the ribbon off, I think, maybe. I'll tell you what, well, let's just get rid of the squeeze one for a minute. Right, let's add. I'll show you why this is so powerful. Visible range volume profile. So right now, what this is showing is the visible range. So, whatever you've got in your view, basically. And if you just take your horizontal drawing tool and just mark the peaks, right? We've got a peak here. Let's colour these purple, I think, just so there's a difference. Alright. Let's do here. Got one on the open that's close enough. Got one here. And then got one up here. Okay. So we're on the hour time frame at the minute, yeah? Now what we want to do is we want to just close this one out a second. We want to go to the 15-minute. And using our high volume, right? Just get bigger on these. You'll see which one's the high volume because the colour's different. Now these lines, these purple lines that we drew, these are where most traded volume has been in that visible range for how long it's been in there for. So what you're looking for is if the volume candle breaks through some key structures, whether that's key volume, whether it's something like a 200-day moving average or even the 800-day moving average, this is a big move to break through those. So you want to look at a retest or at least if it's broken through, that you can, if there's a potential for continuation. Now this one, you may have missed this initial move, but then what you would have done is got in on that second move, and your out would have been when it tags the next line up. So just as an example, let's see, that would have been a long position. Yeah, so you'd let this candle go. It broke through the 200 day, broke through the 800 EMA, and we got in here. Yeah, we would have got out on the next line up. And the reason we would have got out on the next line up, because this is the next order block, or at least the next level of, let's call it, resistance in the sense of most traded volume. So a pretty significant chance that that would have been a potential stop for where it would have gone. Now you think, well, where would you put your stop loss? Well, you just theoretically you could go as low as here, but that's quite a risky trade. But even so, you still would have made it anyway, because this next candle, would have been okay. Maybe if you would have done 50% of the vector volume, because normally after 50% is really when it goes blue, because that might have started off white as a long candle or a bullish candle, and then when it gets to about 50%, that's when it may have turned into a vector candle. So that's probably where the institutional trader comes in. So that's why you're probably looking about 50% of that as a way to maybe stop off. So it's, yeah, that would have been a nice little trade. What about the next one? Let's have a look. Next one down, didn't really break through any structure apart from here. But the next candle, yeah, you could have argued that it stopped here, but it would have been a risky play to get in on that one. What I'm really looking for is when they cross the main areas here. So where was the next one? So this one didn't close above it. This one did. So this one would have been a nice move. And there's two ways to approach this. So on this candle, okay, so what are we looking for? It breaks through one of your lines of support. Get in at the next candle. So let's look at it's another long. So we would have got in here. Could have probably put our stop below this line, because it's a nice area to kind of think about where the next line of resistance would have been. If you were too close, you may have got stopped out on that one though. And then where would you have took a profit? Well, there's a couple of ways to look at it. You could use the 21-day moving average. So either when it comes back down and touches the 21-day moving average, that's a way to get out, or when it touches the next level. Now, unfortunately, there are no further levels up here, so you may just say, well, actually, I'm just going to go with a 2-to-1 ratio. If you'd have went for the 2-to-1 ratio, then you would have got out about here, somewhere anyway, and took that as a nice profit. So the reason this is kind of a really cool thing to think about is you are breaking through structure with a vector candle, which tells you it's potentially institutional. Yes, we came back down a bit here, but actually, the next move up was a decent move to the upside. So yeah, whether you depend on your level of access, whether you wanted to do it, a short stop or a 2-to-1 ratio or even higher, that's entirely up to you. I mean, if you go back further, there would have been some amazing moves on this actually. Not everyone will be a winner, and I don't trade like this, by the way. It's just something to think about. So here's a really good one here. So a couple of ways to think about it. We would have got in here at this candle. We just set long. Should have been our move. Sorry, that's a short. Use free time. I select this one and go, who would have got in here? We would have done 50% of our vector candle. And then a couple of ways to think about this. We could have used the 21-day moving average. So the moment it's that 21 day. So right now, that may have stopped us though. That would have been a challenging one. So you'd probably just got out for broke even there. Or a bit less. How about this one? Yeah, that would have been a nice one. So, you have to have a play around with that. That might, depending on how tight you were with your stops, you might not want to use the 21-day moving average as a take profit, but actually just use your stop. And if you just use your stop, actually, you know, you wouldn't have got stopped out. And then what you would have been waiting for is a take profit, whether it was, well, that's currently 3-1. I think if you would have maybe used this here as your 21 days, so as the curve starting to flatten out a bit, you could have maybe got out here, but that would have been a nice move, 3-1. But this would have been an even better move. Again, same thing. We broke through market structure, or this consolidated area here from the VPVR. And let's have a look. So move would have been here, 50% of the vector candle is our stop, and then I mean let's be frank. Where else do you want to take this? I mean this could be. You could say here, well actually I'm going to use the 21-day moving average before I'm out again. Well, the 21-day moving average didn't touch until here, which is a 4.48 risk reward ratio. Take that even higher if you are going to the next level. If you're happy that it may still have room to go, you're looking at nearly an 8 risk reward ratio. So these are powerful ways to think about stuff in terms of these vector candles, specifically if you're using this structure, which we know we've gathered from, where the main amount of trading has gone, in the visible range, especially this is a 15-minute, but we were on the hour, so we had a lot of candles in the visibility. So something I may start to think to incorporate in my own strategy with this as well. So I just thought I'd show you that because it seems like an interesting thing to think about. Not specifically about just taking someone's ideas, actually fundamentally understanding what it is you're actually doing and understanding that the vector candles are big moves that break structure, and then continuation is normally what follows. So it's the same for the downwards ones as well. These are the bearish vector candles, the dark red, or the full body red rather than just the black, and then to the upside blue. So that's all I've got for you, I think. Yeah, speak to you soon.